Well, it looks like we're live. Ladies and gentlemen, thank you for joining us. Thank you to the guy behind Brett for also joining us. We have a conversation that's been top of mind for me, covering this space since the beginning of the year. I'm Frank Chaparro, Director of News at The Block. I'll be guiding this panel on scaling crypto apps to millions of users. We have a nice wide range of folks joining us, but to kind of set the foundation for the conversation, right? We have seen unprecedented growth in the crypto market across many different segments, from institutional users to NFTs to DeFi to retail crypto exchange users, right? And so with that growth comes many different questions, headaches, problems, and exciting opportunities. And we're going to be unpacking all of that today. We'll start with Brett Harrison, since on my screen, he is on the bottom with me, so natural to kick it off to him. And then we'll go around the table to do some brief 1-minute introductions. Let's not bore the audience too much with our backgrounds. Brett at FTX US.
Yeah, thanks, Frank. So I'm Brett Harrison. I'm the president of FTX US. I joined FTX US as its first president a couple months ago. Prior to that, I spent my whole career in the traditional finance space, building systems and building out teams to build systems at large trading firms. So first at Jane Street for the first 8 years or so of my career. And then I was at Headlands Technologies. And then finally, I was at Citadel Securities, where I ran the semi-systematic trading technology group, which encompassed ETF options and OTC ADRs.
Ricardo.
Hey, yeah, I'm Ricardo with BRD. I've been in tech for about 25 years, half my career at Oracle. Here at BRD, I head up solutions. We help customers, some of the biggest enterprises, banks, payment companies, figure out how to get into crypto with our infrastructure technology, our wallet technology, and that's about it. Just how do I add crypto into my application or into my bank? How do I build custody solutions? What's the best infrastructure? I have a background in cybersecurity, identity management, big fan of self-sovereign identity tech, and then obviously crypto. And I've been in the crypto space for about 7 years now.
I feel like everyone always says 25 years. That's like the standard amount of time. You ever watch like one of those crime shows and like the detective's like, I haven't seen a murder in this town in 25 years. It's always 25 years.
Yeah, I stopped counting at 20 as the gray hair gets more and more. I figured, and in this space, I actually thought about just shaving this off because I'm not as young as most of the people in this space.
Hey, listen, sure. You don't look a day over 23. Nemil, let's kick it to you.
Yeah, so I had 15 years, I think, altogether in my career, Ricardo. Slowly catching up with you, hopefully one day. But super excited to talk to you. I'm the head of crypto at Coinbase. I had working in the financial services industry, large banks, insurance companies, really radicalized me just for how integrated some of the systems that we saw were. And then I worked at the Gates Foundation for a summer, worked in India and mobile payments, just saw the opportunity for improving financial services. So I had this life-changing opportunity in 2012. I was in Y Combinator. I met Brian Armstrong and Fred Ursum as they were starting Coinbase. Got super excited about the vision and mission, and then really dove in 2014 when Ethereum launched in 2015. Since then, at Coinbase, what I used to run was USDC. It's a $27 billion stablecoin. That's a partnership with the Center Consortium and Circle. And today I lead our crypto team. People often ask me, what does a crypto team and a crypto company do? And we basically create all the APIs that allow Coinbase to build a whole host of different products on top that interface directly with the blockchain.
Rawdon.
Hi, I'm a 20-year guy, and spent half of that time in working in a big conglomerate called Grupo Salinas, helping build tech businesses, working across ISPs, telecoms, television. Then I ran a parental software company as a CEO. And about 5 years ago, I got into the crypto space to become the chief growth officer at a company called Uphold, which is like a mini version of Coinbase. And from there, started at eToro, where I'm now the global director of product marketing. Firstly, to help them enter the US market, and then that transferred into a global role. I spend my time connecting the dots between end users, product, marketing, tech, across our different products, our games to try and make it easy and fund and help people invest and have good financial outcomes. And a lot of that's about the user.
Yeah. Well, in a sense, all three of you, and then Mr. Diaz is kind of helping clients navigate this. But in terms of all of the exchange folks we have on the panel, you have a good problem to have, which is too many clients probably to deal with too many mounting tickets. And this is kind of on the journey to scaling to millions. But before we get to the millions and millions, how do we deal with, folks who can't do a withdrawal or can't do a deposit? This is the question, of the day. Maybe we'll start with Rawdon.
Yeah, I think that's a really good question. One of the interesting parts of our business is connecting the old financial systems to the new ones. And even to this day, the different payment rails, the memo systems that we need to work with, and all the back office work that needs to go on to protect people from fraud, to keep bad guys out of our systems, requires a lot of friction behind the scenes. There are many technological solutions of automation that are gradually getting better and better and more mature to help that, but still sometimes you have settlement issues. You've got money that's being deposited by clients, you have liquidity problems sometimes, especially during these growth times where large amounts of money are coming in through the ACH network, and you need to wait sometimes 2 days for that money to hit your bank account in order to but we want to offer our customers seamless trading. And the same with, there are issues for different reasons on the way the money goes out. And a lot of that is not just about technology solutions, it's also about setting customer expectations. I think Coinbase does a wonderful job of explaining on their UX how to, what to expect as a user, and then providing the staff on the customer service to be able to do that. And that's an interesting game in its own right, because you need to be ramped up for your best, the highest markets, but that takes, operating expenses and a lot of time to get talent and train them into these very important roles that are really critical to our customers' journeys. I don't think any of us are perfect in this world, but I do see a big difference between this wave of growth that we're noticing compared to 2017, where, we didn't have those systems, even though we were smaller companies at the time, smaller user bases. Things like liquidity and being able to service clients during those extremely high growth moments. These days we're a lot more grown up, and I feel that especially in this most recent wave, we've seen a much more effective set of solutions to fix that problem.
Well, Brett's a newbie, so he wasn't here for that growing up period. Nemil, how has the issue of scaling changed for Coinbase? What was maybe the issue, 2017, right? Was every exchange, to Rawdon's point, had issues. But what are the issues that exist now that didn't exist then? And how can we go about fixing them?
I think the biggest thing that we're talking about today is just the scale of this industry and how much that's grown up. So today, for example, Coinbase is at 68 million users. And I think 2017 for me felt insane. Felt like the whole world was in it, but it was still a much smaller segment of the world population that was participating in crypto. And I think that's only going to grow up. And so I think the two reflections that I have is, one is, as we get users who are potentially less crypto savvy than we might have in 2017, people who are really deep in the technology, I think one is usability is going to be increasingly critical for us to be able to think about there. That's number one. And I think the second really critical thing here is just how to scale these processes for a much larger group of customers.
What do you think these customers want, Brett? What are some, is it simply, I just want, when I have a query, to be responded to quickly? And how do you sort of navigate those customer service related issues, but also then add more products, right? Because clients want both at the end of the day, but the old biblical passage, you can't be the slave to two masters, right? So how can you be the slave to two masters?
It's interesting. I think that one thing that really touches on the customer service experience for crypto exchanges is that people are putting and entrusting their money with us. And that's a lot different than providing customer service for, like a storefront. This is, they're putting their money into our hands, we're holding it for them, they're using it to invest, and they want to be able to get it out, which makes customer service queries especially sensitive. So even though we may be able to automate a lot of the general issues that happen around deposits and withdrawals and other kinds of questions that could occur in the exchange, that human touch, that human element, excuse me, it is an elephant in the room, but that human element of making sure that people are being responded to and they know someone is looking into their issue, it is just as important as getting it done quickly. I mean, our customers tend to be very, they're aware of the fact that this is a hard problem, and that sometimes ACH deposits do take 2 days or 3 days to hit up. And it's fine as long as someone's looking into it and is sort of helping shepherd it through. But at the same time, you're absolutely right that customers are looking for a breakneck pace of innovation. They want to see that we're not just helping scale out the original stuff that's on there, the basics of spot crypto trading. They're looking to see, if I'm going to put my money with you, I don't just want the basics. I want to see new products, new kinds of trading, new asset classes, new different kinds of savings type products. They want to see a wide array of things that they can help put their money to good use. And so we have to scale out the customer service experience along with that.
Ricardo, what do you think has changed since the bull market of 2017? What infrastructure has improved, and to what degree have new third-party providers stepped up that maybe didn't exist? In a sense, I feel like the sort of experience that maybe some crypto exchanges have seen mimic maybe what we've seen in the news with OnlyFans, right? Where their bank providers are saying we don't want to work with you if you're doing X, Y, Z. That was certainly the case for crypto, where many banks didn't want to work with crypto exchanges. Now they do. Has that helped folks dealing with people on the front end?
Yeah, I mean, I think it's the biggest one is the compliance and just keeping up with the regulations, just designing solutions. And customers initially don't trust crypto, as far as all of the FUD that's put out there. And I think the evolution and the technology that you've seen around just the infrastructure underneath. So you've seen the evolution of AML and KYC. I think the security companies that have come out there are great in how they're evolving, but ultimately the biggest change that I've seen in the infrastructure and the technology and how it's advanced is how malleable can you make, for example, the policy engines that drive the security and compliance controls that sit underneath these systems, so you can comply with the ever-changing landscape of when travel rule hits, when another regulation affects a different geo. How do you modify your infrastructure to support a particular piece of legislation, especially in the crypto space, because it's constantly evolving. So I think the reg tech, as they call it, the AML technology, KYC technology, and all that whole layer that sits on top of custody, that's evolved and it's changed for the better, but it's still, it's a moving target. And then, as I say, in a space that's measured, the rate of change is measured in quarterly dog years, it's hard to keep up. So.
One thing that's certainly changing, or ever changing, definitely seems like a moving target, is the wild world of decentralized finance. Now, Nemil, how does Coinbase plan on leveraging DeFi infrastructure? We've seen reports, I've written about Robinhood's conversations with Uniswap leveraging AMM liquidity in addition to centralized liquidity. What other ways can firms like Coinbase leverage DeFi infrastructure as part of this sort of scaling process that we're seeing unfold?
Yeah. So first, I just want to say is probably one of the most exciting things happening in this space over the course of the last, since that 2017 bull run. And what I think is so amazing here is that we're basically building a huge financial system from scratch. We've done this in the quiet on the sidelines, relative to where the traditional financial action has been. And that's just super exciting. So what I see is like an internet of finance, an internet of financial expression, and NFTs, all these other products are going to be built on top of that. So it's super exciting. Then when I think about Coinbase's role in it, I think there's one traditional one that a lot of people look to Coinbase for, number one, is the ability to access different decentralized finance products through Coinbase. And this could be examples of a user having their US dollar deposits, moving that over to USDC, and earning savings as part of that process. And that could be, basically you can see Coinbase as one gateway. And we're basically exploring the idea of like an app store where you might be able to access a whole number of set of different dApps that are out there. I'll also talk about two other, maybe three other areas that we're really interested in. Another area, so I used to be the product manager on USDC. And I think there's foundational products in the DeFi ecosystem that help the entire ecosystem grow. USDC, I think, is a really perfect example of this. And there are other examples you can think about, like we talk a lot about identity and uncollateralized lending in the DeFi space. That could be an example of a foundational, set of products that can be provided. So I think there's a whole host of different like building blocks that help the entire DeFi ecosystem grow. Beyond that, I think the other thing is that there is a world where Coinbase, other exchanges, other companies can create their own DeFi protocols over time. And I think they'll bring a unique set of advantages compared to other teams that are building in this space. It's not a replacement, but I think they could be coexist and different sets of value propositions. And I think the last thing is that I always think about this idea, what I call is billions and millions. There's going to be billions of users who are eventually going to be interacting with DeFi, and there are going to be millions of developers who are going to be building DeFi apps. And for that last group of people, the developers, what types of platforms and services can we create that make developing a DeFi app significantly easier?
Really fascinating. What do you think? So you're looking at building out this app store. I guess part of the problem is, how do you, at one point, get the app folks to sort of get on board, and then the users to sort of understand that this is something that they need in their lives? Because you need to get both at the table.
And I think the one thing I'd say is the beauty of the internet was you didn't have to get let's say the browser companies to connect with the websites and have them all align. And I think that's the beauty of what DeFi is that different app developers are creating amazing experiences that the whole world can access. And the goal of Coinbase is to have our users be able to access that potentially as well. So I don't know if there has to be as direct connection. There definitely are ways for partnership in that process. For example, there might be ways that we might have feedback. We've seen a whole host of different DeFi protocols provide feedback on how to make it safer. Could be like one example of something like that. I think you're also right that on the user side, this is a whole brand new technology. And I think my default instinct when I first started in the space was, we have to explain this. We have to explain why DeFi is so interesting and to people. But often what I think about is we use all these products every day, a car, a web browser, where we don't understand the technology behind it, but we see the utility that comes from it. And I think in the same way, when I think about like DeFi apps for users, in a perfect world, I think eventually we want to reach a place where users is thinking, hey, I want to earn yield on this, or I want to have some financial need that I have. I want to get a loan. I want to get a mortgage. And I'm able to meet that with it without having to necessarily understand all the complexities of DeFi. That doesn't mean we don't want to educate them on the different products that are out there, but it also doesn't mean they have to get super deep into the weeds to understand all the details of how DeFi works.
So when we think about some of the businesses that you folks operate, I think the easiest way to define them is retail brokerage. But if we're going to scale crypto to millions or billions, Brett, is that what exchanges and brokers need to do to get to that point? Do they need to sort of have these wide-ranging businesses? And then I want to kick it to Ricardo, since he sort of has a more sort of outsider vantage point, being that they don't operate a retail business themselves necessarily. Well, in terms of a brokerage business, but obviously dealing with the wallet side of things. And then sort of dive into that. Start with you, Brett.
Sure. In many ways, crypto exchanges are not just brokers, but they're sort of like super brokers. They do so much. They enable you to pay for things with a credit card attached to your account. They enable you to send payments to someone else. They enable you to maybe get yield or trade this asset or trade that asset, to deposit, withdraw money. And so the more and more that crypto exchanges and things like that, retail brokerages, however you want to call it, add more and more services to their palette, it's going to become a captive experience where more and more people are going to want to actually put their money in and use the service. And so that is in one way we're going to scale. But there's another piece to this, which is that we see regulation coming for this industry. And I think that's a positive development and something that will shape the role that centralized exchanges play in being the custodian for user information. So in order to scale to millions and billions of users, we need to have great automated systems for onboarding clients. And I think when we do that and we're able to get people very smoothly onto these exchanges, these systems, while still making sure that we're complying with AML KYC rules, that we're preventing criminal actors from getting onto these platforms. Once they've gotten over that fixed cost of getting onto the platform, that will make it even more compelling for them to want to engage with it, to want to put their money in, to want to use the different services that you're offering. And I think that will be a big way of it sort of attracting users to these platforms.
Diaz, what's the approach you guys are taking? What do customers actually want? Do they, are we overcomplicating things? Is it, maybe people just want an easy place to buy and sell assets. It doesn't need to sort of be this, grand vision of all these different sorts of things.
No, I mean, I think we touched on the simplicity and user experience, and yeah, it'd be great if mom could, in her banking application, just have an easy button that says, here's a earn triple-digit interest, and that's it, and it's high risk, etc. But I think when we deal with right now, the innovation that's happened in DeFi and really this new hybrid finance ecosystem that's being built, which is basically between institutional customers and crypto, is fascinating. But I think like the big topic right now that's current, that's beyond custody, is institutional DeFi. So how can I have a bank, or I have a hedge fund, or I've got high wealth individuals that are used to traditional financial services systems. They're used to the security and the compliance controls that they have, the insurance that they get. And sometimes you don't get that with crypto. And so, but what you're seeing with the innovation that's happening is saying, all right, well, how could we provide DeFi services, but through my bank, if I'm Bank of America? And so the back end, the infrastructure is being put in place and integrating these two different ecosystems where you have, dealing with public networks and their speeds, and dealing with DeFi protocols that are sometimes a bit sketchy. But how can you design an infrastructure that is not only performant and secure, but also maybe provides some insurance to those different DeFi protocols? So it's fascinating to watch that. DeFi is amazing, and I think the innovation is going to continue to happen at this accelerated pace. But now that the institutions have come in, after PayPal came in last year, and then all of the different investment banks started building their digital asset teams, now they're not only building custody systems, now they're saying, all right, well, crypto prime brokerage, how do I do this? How can I get access to those liquidity pools on Compound or in Aave, for example, in a more secure and compliant fashion? Right? And can the bank give me those assurances? So under the covers and in the infrastructure, just building those systems between traditional banking and crypto has been a blast. Because I think what the exchange has been doing is really cutting edge. But now it's how can we support the institutions that want to come in, and you have this, an asset manager that has $100 million. They want to put it into Bitcoin, but they want to invest maybe in a DeFi protocol and wrap that Bitcoin. If we can make all that and simplify it under the covers through some of the technology vendors that we have, and really provide that easy button, so you can actually design these hybrid finance infrastructures, I think it'll be a good thing. We're not there yet, but it's happening, and institutional DeFi is probably one of the most exciting trends that we're seeing, where the demand is coming from these banks that a year ago you never would have thought in a million years that they'd even be interested in a DeFi protocol, just because of all of the risks that they perceive and what's happened, right? So absolutely haven't been more excited to be in technology. I wish I was a bit younger, but it's fascinating to watch this evolution of money and finance.
You, like I said, you don't look a day over 23. Rawdon, what's your perspective at eToro? How important is leveraging DeFi to scaling the platform? More folks. We already saw, I think, this morning you guys reported, growth and revenues, and clearly there's growth, but does DeFi further fuel it?
Yeah, we're in an interesting business because, our primary goal is to help people invest and have great financial outcomes. But at the same time, we're building more and more, and our crypto DeFi roadmap is very interesting, and lots of interesting announcements coming soon. For me,
well, no one's listening, so you can just say them all here. It'll be between the five of us.
But that represents a paradox to me, which is this idea of crypto being one utility of crypto is investing, right? But you're investing in what? And if you try and buy an NFT today, for me, NFT has become one of the first decently adopted ideas of DeFi among non-fintech, non-blockchain people. People are now talking about buying and selling and creating DFI, which is no mean feat and amazing to see happen. You're finally seeing a use case where, anybody and lots of people from different walks of life are actually getting it for its very utility, and that's very exciting to me. This could be a tipping point where somebody can understand what the meaning of a smart contract is, not necessarily how it works, but what that empowers them to do. And yet at the same time, if you try and buy a friend of mine listed an NFT, between the time he told me, would you want to be a first bidder on it, to the time I did the bid, Ethereum had gone up like 25%. And so I'm thinking in dollars. And so again, I guess that's where, a lot more work on stable coins and a lot more education about these opportunities. But I still think this concept of the first use case, which has been in an abstract way, very successful, is for creating good financial outcomes. And it's been a sort of gateway from a product perspective. I think the one that surprises me that hasn't grown up yet, but I think you might start seeing it, is payments. We did some research not so long ago, and a lot of people are holding crypto using Venmo or Cash App for their payments. Why? Because it's easier, and they just want to think in dollars. And so it's going to be very interesting watching how these DeFi use cases get adopted and scale up in the consumer world.
Yeah, that makes a lot of sense. I'm looking at the story, by the way, for folks who are interested in the specifics. eToro's Q2 crypto income soared by 23 times compared to last year. So congrats on that. But so you guys are all making all of this money, but we're still seeing customer tickets ramp up. But in any case, what about marketing? Clearly, that's an important component of reaching out to more users to get them interested in the weird, pedantic things being built out in crypto. What is the strategy there, and how key of a component is it to, you can have the apps, you can have the tokens trading, but if people aren't getting the message, then it's almost futile or mute. Brett, you guys, obviously people see, you guys just bought a new college the other day or something. I forget what the news was exactly, but let's talk about marketing for a second.
Yeah, absolutely. So as you and others may know, FTX has been doing a big push towards a number of large, branding, sponsorship, partnership things in the US. And, we're a very young exchange. We only launched around 14, 15 months ago. And so we had this great product that many of the top trading firms, institutions are using, but we don't yet have this huge retail user base. And so how do you do user acquisition? Well, maybe traditionally what you would do is go out and buy some, Facebook ads or Google ads. But first, we find that method to be somewhat diffuse. And second, that maybe that attracts people to download your app for the first time, but does it really make them a user that wants to move their funds into your platform and trust you with them and trade with you for the long run? And so I think a big part of making that last thing happen is becoming a household brand, becoming something that people sort of know and associate with, with trust and safety and popularity. And so our approach has been, let's get out there as fast as we can and to a widest audience as we can. So for example, we're now the official crypto exchange of the MLB. And people know that, look, if the umpires are wearing the FTX patch and the Major League Baseball has done their due diligence in FTX, those guys are legit. We want to put their, we want to trade there. Same thing with like, you're driving in Miami by the FTX arena, yeah, this is a serious exchange in the US, and maybe I haven't heard of them yet, but I sure as hell has heard of them now. And so that's been a bit of our approach to sort of the marketing and branding push that we've been doing.
Ricardo, aside from having the great Spencer sort of at the helm of the marketing push over there at BRD, what other things or ways can you guys get creative?
On the marketing side, I think it's we're already doing it. How we educate and with the awareness issues in this space, I think it's you have between the retail side of how do you get customers just to understand why it's a good thing and what are stable coins, and on the enterprise side, the challenges that we have are a little deeper because you have to educate bankers and enterprise architects that may not know things. So it's that. I have to rely on people like Spencer to get things done and to be able to come up with a messaging for the enterprise. On the retail side, I think it's we're doing a good job there, and we're happy with how we do our branding but ultimately, I think the trust that our brand brings, because we've been doing this since 2015, is what we rely on, and why our customers use our wallet, for example.
I think at eToro, you guys have had some interesting commercials, like that one guy, the HODL guy.
Yes.
To what degree has that helped bring? Is that effective? Does that work? Or
obviously we're a global company and we have to market in many different markets. And eToro got early into the concept that to lean into what Brett said, into the branding's highly important, and acquisition marketing can be useful in certain channels at certain times using different channels. But branding has been really powerful for us, and I think you'll see more quite exciting type content and branding. I think there's also so many, as you go through the funnel of a customer journey from the moment they first discover you, and again leaning into Brett, they're like, oh, I saw that, I don't know what they are, and then you touch them somewhere else, they read an article on the block, and it's brought to you by eToro, and they're on a learning moment, consideration. They want to learn about crypto, and they see the same brand there, and slowly they come into your funnel, and you want to continue that journey in a really thoughtful way, so that the user, you're building on their trust, you're building on their perception of what you're going to deliver them and what they can get out of, what their end game is, what they want, to deliver on that. And I think the other thing that's very useful and unique about eToro is our social trading side of things. So that means basically three things. One, you can join a feed and read people's profiles and be part of this community, and it's very lively and a great way to exchange ideas. The second is you can obviously copy other traders, and so you can learn from their trading but also mirror them, so have a kind of a managed investing product. And finally, we have copy portfolios, which are professionally managed by our internal trading desk and fund team. So, this idea of giving people leaning into that credibility of here's a place where you can come and invest and learn, and making sure that at the top of the funnel, all the way through that, you're teaching people about the opportunities that they would have with your product.
I want to move over to.
There's one other point I think is really relevant about this, and also scaling, because some levers you can control when you're marketing, others you can't. So if you're hitting this influx of users, we've taken some quite tough decisions where, through these huge piles of users, people who we want on our platform, but that could come at a cost of having too many users in too short of a time. And I think anybody running marketing in a grown-up exchange knows the dangers of having too many users backing up your customer service at the cost of your existing users. So sometimes those levers that you can actually control in terms of budgets and in very short spaces of time are very useful for helping scale as well.
I want to move over to something a bit more technical. I feel like we spent a bit of the conversation exploring how we can sort of mollify or rather ameliorate the experience of the retail user or of the consumer. But there are also sort of developer questions hanging over the space, right? I talked to folks at Solana, for instance, it's hard to find guys that can, do Rust programming. A lot of the different layer ones are kind of relying on the same guys. They're wearing many hats. They're wearing a Near hat. They're wearing a Solana hat. They're wearing an Ethereum hat. There's just not enough people out there, and they don't have the tools necessarily, right? I know at Coinbase, you guys have Rosetta. You guys took something that was internal for kind of onboarding blockchains into your own internal systems, creating this open standard to allow developers to build out applications and kind of know the rules of the road, so to speak, to blockchain development. So I want to zero in on this. How do we make it easier, not just for customers to want to engage with our respective platforms? And we even grapple with this at the block, right? How do we make sure you're not getting booted out of the site? How do we make sure you enjoy being on FTX or Coinbase or BRD or eToro? But how do we as firms in the space help grow adoption among developers so that they can build these tools and rely on industry standards? It's a long-winded question, but I think you guys can handle it. We'll kick it to Nemil at Coinbase.
Cool. Well, I think I'll say something maybe obvious, but crypto is not going to grow without millions of developers building on top of it and being highly productive with a stack that is there. And to me, when I started in the space, it's still relatively unproductive compared to other parts of the ecosystem. So when I was in tech, we were working with like Stripe APIs, for example, super simple to use. I think crypto has still a long way to go to improve the usability. So I think what I really drive home is that usability for these tools and APIs is really, really critical to get developers to be able to build really great experiences. Rosetta is one example for us. So when I started, there's this manual process where we work with the blockchain team, go back and forth over emails and Slacks and different conversations. And what we want to do is create a series of APIs and standards that let you build against one API. And then any developer who wanted to build on top of that could use those same APIs, no matter what the blockchain was. So for example, if I build a block explorer, I could build against one blockchain and another, all in the same way. And for blockchain team, the power of this was that you could basically create it once and have a whole host of different application developers on top. So I think that's just one example for us of how we can increase developer productivity, make it easier, and then hopefully build up a bigger ecosystem for those developers.
Yeah, I think standards. I mean, I think everything you said is spot on. We have, we built our backend Blockset API is all about making it easier for developers to get access to multiple chains through a single source API. But I think in the space, we need more standards just because developers are used to standards, right? And so, for example, today, how KYC and AML is done to deal with compliance. You have so many different services and there are not enough standards. So wouldn't it be great if you had a KYC standard, right, that you can maybe leverage decentralized identity technology to say, can a user present a set of credentials, their own verifiable credentials that represent the KYC that a particular exchange has. And so these standards today, like when the internet was born, you had a bunch of different standards, and you have HTTP, and right now in the crypto space, because we have the basic standards that we're using, but they're all Web 2.0 type standards. But I think the evolution of how developers have to deal with things like compliance, and if I have to build infrastructure that has to deal with a travel rule that is a moving target on a yearly basis, for example, or the geographic limitations of AML in Switzerland versus the US, can I standardize some of this technology in a protocol, as opposed to not in a DeFi protocol or DLT protocol, but the actual KYC, maybe come up with, instead of having KYC managed in individual service providers, can you create a standard around KYC and leveraging identity technology, for example, to push the compliance and privacy onto the end user? So it's things like that. I think if we had more standards in the space that could address some of the issues that we have of keeping the regulators away from us, I think it would be great to see that the evolution of how we do, for example, compliance and security today at the exchanges and at the self-custody wallets, and then provide those, probably the leadership that the companies here can deliver, but also can we push new standards to leverage the existing technology that's out there to do it different. So it's to me, it's one of those things that we're involved with that's very exciting, and hopefully we'll see a change to make things easier for developers, for companies, and ultimately to keep your business safe from the regulators.
Yeah, the regulators are always there, it seems. Sorry, I didn't mean to
No, I was going to say,
interrupt.
someone asked the question earlier in the chat about DeFi oracles, and how are they, or why are they exciting for consumers, for traditional finance firms. And I think those are examples of ways to enable innovation in the developer space. So having standards is really, really important. And what Ricardo said, I think getting good standards for KYC is very important, so that there's not some huge barrier to entry to having a app that complies with US regulations. Another super important thing is making sure that we're constantly building composable pieces that can be reused by different developers. So something like the Pyth Oracle is a great example of, well, now that exists, any developer can easily spin up an app that pulls in market data off of a blockchain and puts it in their app. Or if you have some reusable DEX or some reusable pool or a different kind of protocol, it makes it so much easier for developers to jump into the space and, again, not have to build the whole thing from scratch themselves. They can start from these pieces that they can reuse. So one important thing, and it's much more of a cultural thing than it is a technological thing, is making sure that this space of crypto developers continues to push out pieces that are open access, that can be reused by different developers, that are well documented, well tested, so that we can have this exponential explosion of innovation.
Someone mentioned kind of the thinking of developing on Web 2.0 versus Web 3.0. There are many different challenges that we've kind of unpacked, but if we're sort of going to drive home the differences betwixt the twain, what are they?
So I can go with a few things that come up to mind for me. So I used to audit smart contracts, and I think one of the things that I think is really clear is when security matters a ton. You don't have the ability to change the code at a moment's notice, and I think that's a really big difference in terms of how we think about more traditional systems.
You want to unpack that a bit more?
Yeah, absolutely. So I might create a protocol. I write a piece of code, I deploy it on the blockchain. And basically, it's not that different from a piece of hardware. When I'm putting it out there, I can just change it on a moment's notice. I might have a whole governance process that I need to be able to go through to make changes. Some of the contracts actually don't have the ability to be upgraded. And so if there's a bug in that code, there's a huge potential risk there. And the example I always give to the developer teams that I work with is, you have one moment to get the code right, but hackers have the rest of history, especially if it's not upgraded, to be able to find bugs there. And that's a huge, huge shift. If you're a traditional Web 2.0 engineer, you're at a FANG company in the Valley or something, it's a very, very different way that you're thinking or writing. And I think that's why early on you might see examples of hacks and things like that, because the entire community is learning, how do we build these systems? And now I think we're building, based on what Brett said, this idea of composability. Hopefully the risk is going down because people have tested these components, use them for a whole period of time, and now we can build on top of it.
Yeah, no, as a cybersecurity professional, for sure, the evolution of security too in the space has been fascinating. I think DeFi hacks are probably the most elegant hacks that you see out there, because it requires not just some script kiddie copying some script and slamming your system, but it's actually somebody who understands these smart contracts and a little bit of finance. So I think in the future, when you have more bank activities that are going to be, when they trust smart contracts and you have bank activities being driven with smart contracts, as they see the value in this technology, for sure, having standards and even increasing how, today you have these CISSPs, for example, these certified information security professionals, but the kind of education that these security professionals, they just don't have when it comes to smart contracts, right? Because it requires a whole different level of understanding of technology. We've got great companies in this space that do smart contract auditing, like QuantSnap and them, but I think watching how security was managed in the past and now with DeFi, because it's it's a completely different emotional experience when somebody says, hey, I just stole your Facebook data. That's one thing. But when somebody steals your money, it's a completely, your people just immediately won't trust you, right? And none of the companies on this panel or in this space can afford the kind of that kind of bad PR when it comes to, hey, I don't do security well. And so it's for sure security standards and how security technology controls have been implemented in the Web 2.0 world is completely different than how it needs to be and how it's evolving in a Web 3.0 world, for sure.
One thing that you definitely don't want to get wrong either is approaching the regulatory environment. I'd be curious to know from some of the folks how maybe the travel rule in particular is impacting product design, affecting UX and some of your back-end processes, or could.
I can start with that. So I think that in general, the approach to compliance for something like the travel rule for crypto exchanges hopefully evolves to be one that allows the crypto exchanges themselves to figure out what's right and explore the space for themselves. Because not every money service business, not every bank, not every crypto exchange is the same and has the same sort of requirements and needs. So I think it's something that everyone in this industry, everyone on this panel is sort of exploring in real time. Obviously we have to conform with KYC, AML standards, and make sure that we have the correct information on our customers to make sure no one bad's coming onto the exchange or money laundering. But as Ricardo said, there's no standard for that. There are all of these different services out there. Some of them are better than others. Some of them are easier to use than others. Some of them provide different levels of depth and granularity for information than others. And so it's just constant exploration to figuring out which are the best platforms to, yes, be able to comply with sort of the regulations we think exist or should exist, but also to not provide too much friction in the onboarding process. That's a really tricky thing. We are necessarily introducing friction into that process when we make someone, take a selfie or, give their photo ID or enter in their social security number, but it's a necessary part that we have to get right. And then as far as making sure that, the full extent of the travel rule is being followed, it's tricky. And I think that a lot of exchanges are, taking, risk-based approaches and using, various distributed ledger technology and things like that to be able to sort of track or at least heuristically track the owners of different wallets, including all these sort of private hosted wallets over time. Things like Chainalysis, TRM Labs are definitely things that, I think everyone here is either working with or considering using to make sure that we're doing the best we can to make sure that as money travels through this system, it's being tracked in a proper and responsible way.
I mean, there's several approaches, and there is no clear standard yet for the way the crypto industry is going to go. But you could start off, which again I think nobody in this room would want to do, which would be to obey the letter of the law, because we can't pass on that information because we don't often know whose wallet it's going to. The first rule would be, well, if it's over $2,999, sorry, mate, you can't withdraw to a wallet more than once in a day. And I think that would be pretty bad for the industry and make a lot of customers very unhappy. The next approach is to put some of the burden onto the user, but that's certainly not going to be very satisfactory to the regulator. When you say to a user, look, mate, if you're sending this money to an institution, don't, because you'll be empowering us to break the travel rule. And again, that might be and I've seen certain people talk or try and address it that way. And then the final one is being, per Brett, being able to actually, be able to recognize that on the blockchain. But that presents obviously huge technological challenges that as several organizations are trying to address. But then what's that mean to the user and their privacy? And then you go back to a more philosophical argument. Well, are we suddenly, because of a regulation like this, no longer as DeFi as we'd like to be? And I don't think any of these questions are answered.
Well, I think that some of the work that we're doing with some of these banks in particular, for example, leveraging, if you can push the KYC requirements like I talked about earlier, can you hear me?
Mm-hmm.
Because I think Rowan's still talking.
Not clear yet, and so
Well, there he is.
we're working.
You're coming
Are you
in and
there?
out.
Sorry,
We missed the tail end of what you just said.
I think I probably was just repeating myself anyway. So I just think it's unclear. So
It's
we have to
unclear.
do our best to follow the.
But I think the thing is that I don't think that we have to wait years for new standards to come to fruition, because that's what you need. Because when it comes to KYC, and for example, look at the all the Bitcoin ATM providers. Every single one of them KYCs customers differently when they want to liquidate Bitcoin, right? Some of them use a common denominator and say, hey, just up to $800 or $500. Others go to the 2,995 limit. But this work that we're doing with this bank and some of these payment companies is, can you push the KYC requirements to the end users using decentralized identity technology? So you can have, I come to Coinbase with a set of verifiable credentials that says, here's the, and on the back end, you have maybe a Jumio providing the KYC information that issues those credentials to the end users. And so what has to change in our space is not continue to repeat how we've dealt with KYC and AML technologies in the past. We have to leverage some of the innovative new technologies, in my opinion, that exist out there. SSI technology is something that unfortunately has come to the masses because of COVID and COVID credentials. But I think if we leverage some of this technology that's all about pushing privacy to the consumer, and then create standards around, well, if you're going to come to Coinbase or eToro, then please provide not only with your KYC credentials, but also as a wallet provider, then we can put in the right AML controls in a particular geography and say, all right, here's the KYC credentials that we have, and maybe the how AML is implemented from a travel rule perspective for one country versus another. Those controls can be pushed in a product, either as a wallet or in an exchange. But ultimately, we can't dealing with, I like to say, we like to design risk intelligent architectures that shouldn't care about whatever regulation is. And the way you do that is by having healthy standards and using new technology and not repeating the mistakes of the past. And I think if we leverage this technology that's meant to put privacy on the end users, the whole concept of decentralized identity is I would own my own data. And so why wouldn't I own my own financial information? And if I can come to Coinbase already KYC, then Coinbase doesn't have to spend the amount of money on privacy and JDRP that they have to do every year. So the value to exchanges and the value to the space and to banks is tremendous. All right, the value to our consumers, if you're leveraging a KYC SSI standard, for example, is great because they control it. So it's things like that innovative companies and banks that are thinking like this, and architects are going, all right, can we do this a little different? This is why I do this every day. I absolutely love being in the space because they get involved with people saying, all right, here's this technology, why aren't we using it? And can we change and can we do it differently?
Ricardo, do you think that this is a genuine question? Do you think that there are conversations going on that technology level at FinCEN?
Yes, I know that there's groups. There's, like, for example, TRISA. TRISA is an organization that's driven by the CipherTrace guys, Dave Jevons and them. It's a bunch of bankers and lawyers, and this is an organization that's been working with regulators since 2018 around and specifically focused on travel rule. And so this particular initiative that we're working on with SSI and KYC is we're working with TRISA, we're working with groups like Trust Over IP in the SSI space, because really the work, the hard work isn't the technology, it's hurting the cats. So how can we get all these different working groups to sit there and say, all right, here's a new way of doing KYC, and can we do this way, and can we do it in a way that can fast enough so the next time we get an infrastructure bill or next time the regulators just get tired and say we have to regulate, that we can show them is like, look, we are doing this better, right? And we don't have to suffer like Binance has. Binance suddenly says, all right, yeah, no mas, okay, we're gonna KYC. So it's that. I think that if we can do this better, leveraging some really smart individuals in these particular spaces, and then working with the groups that have already been doing this, like TRISA, Trissa IP that have worked, Trissa and people like Caitlin Long, all of these people that have worked with the regulators and are educated. Dave Jevons are educating them and saying, here's why the crypto's great, but also if we can talk to those same regulators and say, all right, here's how we're going to change, right, and do it better. That has to happen, and those conversations and that work more around lobbying will probably take longer than the actual creating a new protocol for KYC and SSI, for example. But it's happening. It will happen.
Well, we gotta get Mr. Diaz goes to Washington at some point. Well, ladies and gentlemen, we're getting to the end of the hour. I want to be respectful of the listeners' times. I'm sure they've got time. I'm sure they've got meetings and such to attend to. But gentlemen, we could have gone for another 4 hours. We'll have to do a return of the scaling at some point. Brett, I feel like your colleague's screen has gotten more and more dim since we started. I don't know what he's doing, but I can't see. Anyway, thank you so much for joining us. Hopefully we'll have you all back soon. Thank you so much.
Yes,
Thanks, everyone.
Thank you.
Thank you.
Thanks.
Thanks,
Talk to
everyone.
everyone soon. Cheers.